Welcome to the Real Estate Majlis podcast, where we dive into the latest real estate insights and trends. Whether you are a seasoned investor or a first-time buyer, our podcast is here to provide valuable information and expert advice. This episode is powered by Beirut, the UAE's leading property platform and proud member of the Dubizo Group. Whether you're buying, selling, or renting, Beirut connects you with real estate solutions tailored to your needs using innovative tools like TrueCheck, TrueEstimate, TrueBroker, and Beirut GPT. From finding your next home to advertising your listings with confidence, Beirut offers real photos, real prices, and real properties, helping you make informed decisions in the market.
We have a great friend and real estate leader with us today, Mr. Walid Shihabi, the co-founder and COO of Keyper, a very well-known brand now in Dubai.
Thank you, Dr. Mahmoud. Great seeing you again. Great seeing you. And thank you so much for having me. I'm a fan of the program. I think you guys are doing something amazing. A lot of people, obviously, real estate in Dubai is a very interesting topic. And I think you're bringing a lot of people in that add a little bit of insight and a little bit of value and are doing some interesting stuff in the market.
Tell us more about your product, which is Rent Now, Pay Later.
Correct.
What is it? What motivated you to do this program and how successful it is so far?
So Keyper is a PropTech, of course. It's a company me and my co-founder started a little bit more than 3 years ago. And the idea is to be a digitally enabled property management platform with embedded financial services. And probably the core financial service that you're familiar with and you've heard of, and probably that's gotten a lot of traction, probably because there's a lot of need in the market for it, was RNPL, Rent Now, Pay Later. And to describe it in particular for you, it's effectively allowing people to pay their rent digitally and in 12 payments in line with their monthly income, effectively solving for multiple problems in one go. Number one, as you may know, in Dubai, the majority of rents are paid significantly in advance.
True.
There was actually a very recent piece of research. When we started the company, around 60% of rents in Dubai were paid in 4 payments. I'm talking residential mainly right now. 60% were paid in 4 payments, and the majority of the rest was paid in 1 or 2 payments. What that means is that you're either paying 3 months in advance every time you pay your rent, or 6 months in advance, or even up to 1 year in advance. But the majority were funding 3 months in advance. Today, and with the strength in the market and the higher occupancy rate of properties and the high demand for properties in Dubai, that ratio has actually gone down to around 20% in 4 payments, and most of the rest is in 1 and 2. Which has made it an even more difficult burden on tenants to pay. People who have lived in Dubai for a long time have, lived with that pain point. 10, 15 years ago also, a lot of companies used to pay that rent on behalf of their employees. Today, that is a minority of the cases. So imagine somebody coming from another country, let's say from Europe, from the UK. They're used to pay their rent on a monthly basis. When they move into a new place, there's a security deposit, there's a commission, and there's 1 month of rent to pay. So even though rent in the UK might be cheaper than Dubai, the actual out-of-pocket that you put to rent a property in Dubai is actually higher, simply because you're always funding so much more in advance. And then you run through also how the experience was for these tenants, and they'll tell you, besides the fact that I had to pay significantly in advance, what's this thing called check that you're asking me to write, right? Nobody does checks anymore. No consumer, at least, does checks anymore. Everything that you spend money on these days as a consumer is digital, right? From the basic stuff to the luxury stuff, etc. It's all, Apple Pay. It's all digital payments, etc. Your biggest expense, if you don't own your own home, your biggest expense is rent. It constitutes around 30 to 40% of your monthly spend.
Which is a lot, yeah.
Which is a lot, and you're still going to the bank, asking for a checkbook, writing post-dated checks, scheduling these checks in the future. And it's not just a problem for the tenant, it's a problem for the landlord. Imagine I'm a landlord with 10 properties doing 4 payments per property. How many checks am I actually managing and remembering to deposit these checks on time and then checking in my bank if the check passed or not? And imagine there's a bad signature on the on the check, so there's money there, but now I have to go physically to the bank, recollect my check, replace it physically with my tenant. It's just a broken experience overall for both tenants and landlords alike.
Yeah, I think landlords before, they were comfortable with the check idea because you could, if you bounce a check, you had a lot of leverage with that tenant, but that now is gone as well. So there's no value.
So the only value then that remains with them getting that check is securing and locking in future payment. That's the whole idea is you have a time in the future pre-scheduled that you should be receiving your money on as a landlord. So you have comfort that, this tenancy is going to be paid on time, or there's a mechanism by which that payment can come on time. So in order to solve for that digitally, you need sort of the technology where, you have a subscription on Netflix, right? Do you have to go into Netflix every time and pay? Or does it just go into your card and deduct on pre-scheduled times per month? It's pre-scheduled times per month. So you need to come up with a digital solution that is pre-scheduled, that deducts on time. And if for any reason the payment doesn't go through, for example, lack of funds, it's instant that you find out that there is a lack of funds in the account, and then you can follow up or escalate as you need. So the convenience for the landlord now is complete in what we have built, because we've built them a full platform, an app effectively, or for larger landlords, people with like 1,000, 5,000 properties, we've done it on the web as well. But it's very convenient. You know when the rents are due, you know when they are scheduled, you get an update on the status of the payment directly. And for the tenants, there is an app. You can upload your credit card, or you can use what's known as direct debit.
Yes.
It's a cheaper way to process payments, and we allow for it instantly within the process of starting a new rent. You sign your tenancy contract digitally via an integration with DocuSign, and then you jump in immediately, upload your card, or activate a direct debit, also in a digital journey. So we've really made it easier for both sides of the equation through technology to activate. And then, since we've captured it digitally, we allow for the landlord to ask for their full rent now. It's what's known as rent factoring. So we're basically buying out the rent of the future by paying them now. And we allow for the tenant to take that same tenancy and spread it into 12 monthly
The
payments.
only option is 12 months?
No.
And does that come with cost?
If you are sort of experienced in the Dubai real estate market, you'll know that you want to rent a property, that the landlord will say, if you pay me in one check, it's 90,000. If you pay me in 4, it's 100.
Yeah.
Right? So the market's already established the difference in price.
Yes, that's true. Yeah.
Based on the number of payments that you
Yes,
made.
correct.
So we've taken the pricing off the market and implemented it in the
same
platform
logic.
itself. Our average spread is 6%. So let's say if you started off with a tenancy at 100,000 and you want to digitize it and split it into 12, it should cost somewhere between 5 to 7, 8%, depending on the number of payments that it is coming from. We've actually used what the market adopts as pricing, and we've implemented that. Now, unfortunately, 12 payments in Dubai, as per our research, is only 1.5% of the total rents in Dubai.
Okay.
And if you ask the demand side, the tenant,
Yes.
what's the number of payments you would rather pay, 70% actually say, I'd rather pay monthly because that's how I get paid.
Sure.
Right? My salary, I receive it monthly. I would like to pay my rent monthly. So you can see the difference between the actual state of the market and the underlying
So what
demand.
you're saying that the people are choosing to apply the service, they are fully fledged in the 12 months
Correct.
option.
Correct. And it's the one that's missing from the market, of course, because nobody offers you, no landlord wants to deal with 12 checks to start
Yeah,
with.
of course, yeah.
There is the assumption that it is a lower credit, which is not true, by the way. It's actually the opposite. It's easier to pay a smaller amount. Right?
Than the whole amount.
Than the whole amount. So if I am due to pay 50% of the value of my rent next month, it's a big burden, right? I'm going to have to sort it out somehow if I don't have the savings. But if it's a fraction of that, it's easier. It's from my salary. We have a certain credit checks that we do when it comes to the tenant. We ensure that they are salaried. for one. We ensure that the rent load is no more than 45% of their salary, and our average is 32 actually.
So you do a KYC before
Correct.
onboarding that customer.
Correct. And we do a very simple Etihad Credit Bureau
You're linked
credit
with
check. We are linked with the Etihad Credit Bureau to make sure that there is no sort of defaulting financial situation by the tenant that's going to put that in
risk,
in risk.
Now you ask a tenant, landlord and tenant to go to your platform, right? It was one check that you made it 12 months. The landlord now took his money fully.
Nothing to do.
Who takes the default risk?
We do.
And how do you deal with that?
So myself and Omar, my co-founder, are bankers for decades.
Okay.
So
we're safe.
Exactly. So we're comfortable and we understand how to price risk. And your risk is something, if you're doing it for one person, it's either 100% default or 100% no default.
Yeah.
But when you're doing it for hundreds, actually you're doing a law of averages. You're okay with around 2% defaults, let's say, because it's priced into the product. And here's an interesting fact. Rent is what people default the least on. It's the one thing that you pay first, and then you deal with your credit card bill, and then you deal with your, potentially any other liabilities that you have, because rent is where you live. It's the most basic human need, and it's the one that you want to ensure that you pay first. Having said that, we also allow for some delay in payment for specific cases, 1 week each
and
time.
what happens again in default? You go and sue them, or the landlords
It's not suing. In DLD, there's the Rental Dispute Resolution Center. Effectively, because we're the property manager of the property, the landlord gives us the right to raise a case with RDC. Most cases with RDC get settled. There is a resolution of some sort, right? And at an extreme case, if there is no resolution, no partial payment, and they're refusing to make their rental payment, as you know, there's a straightforward eviction process that gets implemented.
And then you deal with the landlord in terms of money distribution, because he took already 12 months.
It's his. What we do is we release the property post eviction.
Yeah, but eventually the landlord has a vested interest because he doesn't want complications on his property, right?
Yeah, and doesn't want the defaulting tenant in there. But the advantage to the landlord is we're doing the hard work.
Yeah.
Right? And we're raising the case, etc. Knock on wood. To date, in 3 years, now this product isn't 3 years old. We started building the base technology for property management and rent collection and digitization. But this product has now been up and running, small at the beginning. Now it's a little bit more scaled for around a year and a half. Our default rate is 0.4%. So it's a very low default rate and not a single RDC case because it was resolved prior to getting to the RDC.
And what's the size? How many landlords on board did you?
So we have around 6,000. We just crossed the 6,000, not landlords, properties. Owned by 2,300 landlords. So the average landlord we have has 2.something properties, 2.5 properties on average. We cater to the individual unit owner all the way through. You had Rami Tabbara here, I think a few sessions ago, and they're among the largest property owners now in Dubai when it comes to freehold. So that's another account of ours. So we it can be single unit owners, it can be people with 400, 500 units as well. The 1 unit, 2 unit owners are what we call the long tail of the market. Around 60% of rental inventory in Dubai is owned by you and I and people who are investing in property over time, so may own 1, 2, 5 properties. And then around 30% of the market's owned by large enterprise, the likes of Wasl Properties, Dubai Holdings, etc. Large family groups and family offices that own what we call 1,000+ units is enterprise. These are people who manage at scale large amounts of property in Dubai. If you're going to solve the problem for the market, you're going to have a product for the 1 to 5 unit owner, and you're going to have a product for the 1,000 unit owner as well. And I'm happy to say we have both now on our platform.
The UAE is giving a lot of space for PropTech companies to thrive, and a lot of investment is in the market. What else is coming? What are the problems we need to resolve in the industry?
We're lucky to be in Dubai because we get 2 things at the same time. We get a very, very dynamic market. So PropTechs, can build value much quicker when you have a dynamic, active market. People from all around the world are buying and investing and moving and etc. So that helps a lot. But then also, as Dr. Mahmoud knows, there's so much initiatives being done by the government and by the Dubai Land Department to focus on building national heroes and market leaders in technology in multiple sectors, but in particular in PropTech, because we believe there's an inherent advantage to PropTech companies coming out of Dubai over pretty much anywhere else in the world. So these two elements, I think, enable a lot of companies to become, national champions, large-scaled entities that take solutions outside of the UAE and implement them pretty much globally. There's a lot we're interested in. Because we're building infrastructure for rental payments and infrastructure for property ownership and management, you can say that rent now, pay later, or digital monthly payment of rent is a big core part of our value proposition, but there's more we're also interested in introducing because we've built that infrastructure. One of the things that we're looking at in 2025 is also cracking what is known as rent to own. So it's a very interesting fact is everybody wants to be on the ownership ladder. You start with renting a property, and then you start generating savings, and your ambition usually is to buy your first home, and then from there, if you're successful, if you've been saving, buy your second one and buy your third one, and by the time you retire, my parents live off their property investments, right? It's the income they generate from these property investments that they have retired on. It's a wonderful retirement tool. It's a wonderful investment tool. But it's very clunky, right? So to go from a renter to a property owner, you have to build up savings enough to pay that either down payment, etc. That's why off-plan is popular, because it's spread out. The payments are spread out a little bit more. But the problem with off-plan is you cannot generate income and you cannot live in it until it's completed.
Yes.
So I believe there is a formula out there where a renter can sort of ramp up their payments a little bit, and that extra payment that they're making, I'm already taking their rent digitally via card. If I'm taking 10,000 a month, I can take 15. That 5 can go towards building equity in a property, and that's I believe people would be interested in that. It's optional, it's opt-in, but it allows people earlier on to start, stepping into the property ownership ladder. We saw people are super interested in that through fractional ownership, for example, companies like Stake and others. A lot of people were interested. I don't have enough money to buy a 2 million dirham property, but I have 10,000 a month I can put in. So it becomes like an excellent way to transition from a renter to a owner.
I think another problem we need to resolve is security deposits, right?
That's a great one. Absolutely. I think there's an option in terms of if you've digitized rental payments, then you can digitize security deposits as well. And then you can create an escrow account where, the problem here is landlord thinks it's their money.
Yeah.
Right? But it's not. It's a liability that you have to account for. You owe that money back to your tenant, assuming the tenant didn't damage the property worth more than that.
By the time that this episode is out, this issue has been solved.
Oh,
so it's already in the government final stage, and will be a mechanism for security deposits.
That's wonderful.
It's happening and very soon.
And this is great because, this is a pain point. Almost the tenants have to write it off.
Correct. And in a lot of cases, or they have to just chase in order to get it back. Correct me if I'm wrong. I heard it's anecdotal. I don't know for a fact because I don't know the statistics, but I've heard that in terms of rent dispute resolution center, the majority of cases are around security deposit rather than actually rental default. I don't know if you have any insights on that.
As far as I know, a lot of cases are about eviction mainly, but also security deposits. So these are the two main issues that you always see in the rent dispute center, either eviction or security deposit issue.
And renewals, right? Price renewals is also
that's also
increase in rent as well.
It's a debate. we talked about the PropTech market evolving. Obviously, a lot of room for lots of things, but in general, the market is still very bullish when it comes to buyers, right? Do you see a decrease on people renting properties and buying, or you see continue to be steady, or you are venturing new communities in areas where the rent is more in demand than buying?
So there is a affordability issue. That's starting to creep up, as you know, if you've been following the market. And let's start with rent first.
Yep.
If you're following the market, you know that, for example, for villas, the rental value averages have more than doubled actually in the last 3 years. Mm-hmm. So people's income hasn't doubled in that same period of time.
And in fact, salaries are supposedly going down according to some of the
there's pressure on salaries because you're getting very good talent coming
migrating
in and competing also on the domestic market. I don't see it as a long-term problem because that's actually a beautiful thing because it will add value, new companies will be created, wealth will be generated. Absolutely, but the affordability problem is real, and I think there's a natural ceiling to where rents can keep going.
Of course.
And I think we're starting to hit that ceiling already. In terms of rental pricing. 2 things are happening to do that. Number 1, like I said, affordability. But number 2 as well is inventory and supply, right? We have gotten a lot of new supply that started coming into the market. We're going to see more of it second half of 2025 and 2026. And we think that is going to ease off the pressure on rental values. At the same time as well, we saw a lot of people transition. It's not fun to get an eviction notice, right? And if the eviction notice, the underlying purpose of that eviction notice is, I want to raise the rents on the property, etc. Most people will feel, you know what, might as well buy a property, might as well go get myself a mortgage, sort myself out, etc. So that source of demand for rent, that used to be a source of demand for rent, has now bought a property instead and is now paying a mortgage. And here's an interesting thing about mortgage. How do you pay it? Monthly, right? Rather than in advance like the rent.
And that's been the argument from buying point of view is that, you pay monthly. The cost of the mortgage, if you just separate the interest rate and your principal, is, actually cheaper than your rent. So it is one of the biggest arguments that we use to have the conversation between renting and buying.
And it's driven a lot of the market for sort of completed products. It's driven a lot of the growth in terms of mortgage volumes as well. Any mortgage provider will tell you it's been a very good 3 years in terms of provision of mortgages, even though interest rates have gone up in the same time, right? True. So, and it just tells you that where this underlying demand is coming from. Real estate as an asset class, Dubai real estate as an asset class, is not just determined by rental yields, it's also determined by the quality of the asset class itself, its accessibility, etc. So you find a lot of non-resident investment coming into the market, and that's a key determinant as well of this market. Dubai is a global city now, so it has a global demand base for its product, and that's kept also sort of the flow of investment very, very strong over that time period. But that means for you to actually assess where Dubai prices will be in 12 months' time, you have to be a geopolitician. You have to look at the global economics. You have to look at capital flows globally. Where are they going? From when are they coming? We were looking at non-dom rules and taxation rules in the UK to assess whether we're going to start seeing more flows coming from capital from the UK into Dubai. So it's a harder one to follow because it's so global. Had we been only a domestic market, only local buyers of property, local renters, etc., it would be easier to assess. But you have to have a lens that's more global, I think, if you're going to sort of assess overall global demand on the property sector here.
Mahmoud, do we still have that half-half between residents and non-residents buying real estate? It's still very much...
I think, still 60% are tenants, right? And 40% are owners. So I'm very excited to see your second venture, to tell you the truth.
Inshallah.
I know that some countries are doing it. I think UK, they have it. So you can buy equity more and more. And you have an option to buy or not to buy.
Correct. It's a tricky product, but I think one of the key things that it requires is tenant enablement, and we are providing that already in place. So I think it's just the next step becomes that much easier. What I like also is we're solving for the owner. Today, the product that we have for the property owner is probably unique, not just here, in most other markets, because it's a very data-enabled product. We tell the owner of the property not just how their portfolio is doing and in terms of managing their incoming payments, etc. We tell them how the market is doing. So if you own a unit in one location, we'll tell you every time a similar unit to yours gets sold or rented, and that's because of the data transparency in the land department, and make sure that even if you're in Dubai or you're anywhere in the world as an investor, you have feet on the ground, eyes on the ground, seeing how the market's performing, and that sort of also enables you to take decisions rather than having to depend on hearsay or that one broker that you know that's recommending you do X, but maybe the broker wants you to do X because he makes more money if you do X. You know, we're giving you a little bit more education, a little bit more sort of insight into the market on managing your property investments. All other asset classes do it. You own equity in a market, right, in a stock market, the data is plentiful. You know the profitability of the underlying company, you see demand and supply, market performance live. Most people have more money in real estate than they have in the equities market. So it's only natural to give them as many tools and as much insight as, you know, the equity market. And it's been a great way for us as well in terms of customer acquisition. People just go to the App Store, download our app, onboard their properties, 60-second process, end-to-end, pre-mapped. So we already know the unit. If you put unit 102 in the following building, we know its size, we know the price at which it was bought, we know its status in terms of rental. So the onboarding becomes that much quicker, that much easier, and you're up and running and you're data enabled now.
And you see people opting for the service for a particular segment, for, you know, you see more of your customers coming for 1 bedrooms, 2 bedrooms, or larger properties?
So most investment properties are smaller, and most end user properties are larger. That's typically the case. So, for example, let me tell you, the yield on a 4-bedroom villa in Dubai Hills is low. And that's because its price is high, because a lot of end users are paying top dollar to get that villa. So from an investor's point of view, you're getting less yield on the property, but you're getting high value, probably very high defendable value. A smaller unit in other areas is very likely to have a higher yield.
Yes.
Right? So investors tend to look for yield as their first sort of criteria. And then obviously capital appreciation beyond that. They want to see the dynamics of that area, that developer, that development itself, and how that can pay them. So you look at studios, most studios are investment properties. You look at 4-bedroom villas, most 4-bedroom villas are end user properties. So it's almost straight line in terms of the owner mix.
Good.
Walid, thank you so much for being with us today.
It's
Very
my
interesting
pleasure.
Conversation.
It's
Thank
always
you so much.
interesting. Thank you so much.
Thank you, and we
guys,
look
for
forward to
having me.
hear more about the service. Thank you, Walid.
My pleasure.
Thank you.
Thank you so much.